My name is Rahdric C, financial advisor and founder of the Goods Virtual World. Welcome back to Good Wealth. This module is different. We are slowing everything down. No complicated language, no institutional jargon overload. This is the final reset. Because most people do not fail the Series 6 exam because they are not smart enough. They fail because they rush. They confuse similar concepts. They panic. Or they memorize words without understanding what those words actually mean. So in this final module, we are going to simplify the entire system. And more importantly, we are going to focus on the questions people miss most often. Let's begin with the biggest principle on the entire exam: suitability. Suitability simply means, is this investment appropriate for this client? Not, will it make the most money? Not, would I personally buy it? The question is, does it fit the client? That means every recommendation depends on age, risk tolerance, risk capacity, income needs, time horizon, investment objectives. Write this down. The client determines the answer. Now let's test this. A retired client needs stable monthly income and cannot afford large losses. Which investment is most suitable? A. Aggressive growth fund. B. Emerging markets fund. C. Income fund. D. Sector fund. The correct answer is C. Why? Because the client needs stability and income, not growth. Most people miss this because they think higher return equals better investment. No, the correct investment is the one that matches the client's situation. Now let's move to one of the most commonly missed areas: account opening requirements. To open an account, 4 things are required: name, physical address, date of birth, social security number or tax ID. Write this down exactly. And remember, a P.O. box is not enough. The USA Patriot Act requires a physical address. Now let's test it. Which of the following is required to open a new account? A. Annual income. B. Investment objective. C. Social security number. D. Net worth. The correct answer is C. Why? Because SSN is required identification. The others help determine suitability, but are not required to open the account. That distinction matters. Now let's talk about mutual funds. A mutual fund pools money from many investors. That money is professionally managed. The price of the fund is called NAV, net asset value. Mutual funds are priced once per day after the market closes. This is called forward pricing. Write this down. Mutual funds trade at the next calculated NAV. Now let's test it. An investor places a mutual fund order at 1 p.m. Which price do they receive? A. The current intraday price. B. Yesterday's closing price. C. The next calculated NAV. D. The average daily price. The correct answer is C, because mutual funds only calculate price once per day. Now let's talk about share classes. Class A shares. Front-end sales charge. Lower long-term expenses. Breakpoints available. Class B shares. No front-end load. Deferred sales charge if sold early. Class C shares. Usually no front-end load. Higher ongoing expenses. Write this down. Class A favors long-term investors. Class C favors short-term flexibility. Now let's test it. An investor plans to invest a large amount for retirement and hold it for 25 years. Which share class is most suitable? A. Class A. B. Class B. C. Class C. D. Money market. The correct answer is A, because Class A shares benefit long-term investors and offer breakpoints. Now let's move into variable annuities. This is another heavily tested area. Variable annuities are securities, require a prospectus, have market risk, use separate accounts, offer tax-deferred growth. Write this down. Variable annuities transfer investment risk to the investor. That sentence alone answers many questions on the exam. Now test yourself. Which statement about variable annuities is true? A. Returns are guaranteed. B. Investments are held in the insurer's general account. C. Investment risk belongs to the investor. D. The SEC does not regulate them. The correct answer is C, because the client absorbs market risk. Now let's discuss retirement accounts. Traditional IRAs may provide tax deductions today tax withdrawals later. Roth IRAs. Use after-tax contributions. Allow tax-free qualified withdrawals later. Write this down. Traditional delays taxes. Roth eliminates future taxes on qualified withdrawals. Now test it. A client expects to be in a higher tax bracket later in life. Which account may be more beneficial? A. Traditional IRA. B. Roth IRA. C. UIT. D. Treasury account. The correct answer is B, because paying taxes now may avoid higher taxes later. Now let's talk about behavioral finance. This is where real-world advisors fail. Clients panic during downturns. Clients chase performance. Clients make emotional decisions. This is called loss aversion. People feel losses more strongly than gains. Write this down. Behavior drives most investment mistakes. Now let's move into regulations. FINRA regulates broker-dealers and representatives. The SEC regulates securities markets. States enforce blue sky laws. Write this down. The financial system runs on trust and disclosure. Now let's test it. Which document explains fees, risks, and objectives of a mutual fund? A. Trade confirmation. B. Prospectus. C. Corporate charter. D. Subscription agreement. The correct answer is B, because the prospectus provides required disclosure. Now let's talk about prohibited activities. Churning means excessive trading for commissions. Front-running means trading ahead of a client. Unauthorized trading means trading without approval. Write this down. If the advisor benefits more than the client, the system usually sees it as a violation. Now, final exam mindset. The exam is designed to confuse. Similar words, time horizons, suitability categories, tax structures, risk discussions. So before answering anything, slow down and ask yourself 4 questions. Who is the client? What is their objective? What is their time horizon? What risk can they actually afford? That process alone will eliminate most wrong answers. Now, final lock. Suitability drives the exam. The client determines the answer. Mutual funds trade at NAV. Class A shares favor long-term investing. Variable annuities transfer risk to the investor. Traditional IRAs defer taxes. Roth IRAs allow tax-free qualified withdrawals. Behavior causes most investor mistakes. Prospectuses provide disclosure. The system is built on trust and regulation. If you understand these concepts clearly, you are no longer guessing. You are recognizing patterns. And once you recognize the patterns, the exam slows down. That is how elite advisors think.
And that is how you walk into the testing center with confidence instead of fear. You just got the goods from the goods.